The following podcast was recorded on Tuesday, August 30th, 2022, featuring Jim Bianco of Bianco Research. To hear the podcast in real time, you can sign up for a free trial at biancoresearch.com or arborresearch.com, or by emailing Gus Handler directly at gus.handler@arborresearch.com. You can also call Arbor Research and Trading at 1-800-606-1872. Thanks for your time and enjoy the podcast. Welcome everyone to the latest edition of Talking Data. I'm your host, Kristen Radosh with Arbor Research and Trading, joined today by our commentator, Jim Bianco of Bianco Research. Welcome, Jim.
Thanks for having me.
Today, Jim answers the question, is inflation fever really breaking? The consensus continues to view inflation as transitory across the globe, soon returning to 2%.
Yes, let's start with the first chart. All these charts we're going to show, starting with this one, come from monthly surveys done by Bloomberg News, usually of around 50 to 80 economists per country. And they ask them over the next 6 quarters, what is your inflation forecast? And they show the median. So what this chart shows is various countries. The thick line is the actual inflation rate. And in the shaded area, the thin lines are the forecasts for inflation out until the spring of 2024. What you see with all these charts is the forecasts are, this is it, inflation's done, it's going to U-turn. Maybe the UK is going to take a couple of more months to peak, but eventually they're all going to U-turn and they're going to make a beeline right for 2%. The outlier country has always been the outlier is Japan, which has been struggling to get any kind of inflation. But even still, they've got kind of the same thing going on there too, that their forecast is that this rise that you've seen is done. It's going to then plateau and eventually start back, and in Japan's case, back near zero. So what all of these charts are suggesting, or all these lines are suggesting, is that the surge of inflation is about to end and it's about to turn around and go down.
How do the forecasts break down by developed countries?
So if we go to the next chart, this is the US. Remember that the last line, that would be the purple line you're looking at here, shows it going to 2%. The implication is, oh, here's the economist forecast. As the title says, the fever is broken. But what I show here is all the different monthlies back to 2018. It's always the same forecast. Wherever the inflation rate is, it's going to go to 2%, or if it's at 2%, as it was in 18 and 19, it's going to stay at 2%, or if it's near zero, as it was during the lockdowns in the spring of 2020, it's going to rise to 2%. And ever since inflation started to rise above 2% last year, everybody's forecast for the last 18 months was, this is the peak, and inflation is going to go down. Now, this is the US. Now, if you jump to the next chart is the UK. Now, you'd be mistaken to think I just showed you the same chart because it looks exactly the same. Same thing with the UK. Their inflation rate's going to peak and it's going to make a jump down to 2%. These are all the forecasts. The next chart shows Germany. Again, the chart looks the same. All the inflation rates are going to peak and they're all going to go back down to 2%. The next chart is France. France is the only different in that instead of 2% for them, it's 1.5%. France has been historically running at a slightly lower inflation rate than the rest of Europe. And then if you go with the next chart, this is the entire Eurozone. Again, all these charts look identical. That is the point of what I'm trying to bring out with 1% as well. And the final two charts are Canada. Canada, again, looks almost like the US does. And then there's the outlier of Japan, which is the last chart. And again, Japan has always been the same thing, except their kind of natural long-run inflation rate is more than 0.5%. So this idea that, hey, if you go back to the first chart, hey, look, all of the charts are showing that the inflation rate's going to peak and it's going to go down to 2%. Bloomberg had a big article that the inflation fever is breaking. No, this has been the case every day for the last 18 to 20 months. Is that everybody thinks today's the day that the inflation rate is breaking. And that is really worldwide among all of the developed countries.
So is this a one-time post-pandemic surge that is peaking and will go away, or is it at the start of something more persistent?
That is exactly the question that we need to answer. The first chart, again, if we go back to the first chart, what this suggests is the overwhelming consensus across the globe is this is a one-time post-pandemic surge of inflation because we reopened the economy. It's going to peak. It's going to go back to 2% in 18 to 24 months. And then we could delete the word inflation from the dictionary because we're never going to have any more again. And that this is all over with and done. That's what all these charts are saying. Restated in 2021 terms, inflation is still transitory. It's a one-time event. Now, what's important to understand about these charts is these are forecasts of economists, and I might add, I've seen forecasts of money managers. I've seen what the market is pricing in with inflation futures or tips break evens or swaps, caps, and derivative swaps, caps, and floors on inflation, or all those other things. They all say the same thing as these charts. Everybody has this as their baseline assumption. And their baseline assumption is that this inflation rate is a one-time event. Now, do not confuse that with, so therefore, that's what will happen. Because Wall Street and markets price in something, it's very useful to know that because it tells you where the expectations are, but it doesn't mean that's what will happen. Anything can happen, and they can be completely wrong. I've used this example before. 1 year ago, the forward curve in Fed Fund futures said that there'd be a grand total of 125 basis point hike in all of 2022 1 year ago. We've got 9 done and 5 more are priced in for this year. So just because a year ago we said there'd only be 1 rate hike, that didn't mean we're done. 2022 is going to have 1 rate hike. It didn't come to pass that way. So this is really the question is this overwhelming belief that inflation is a one-off because of the pandemic correct? I've been on the side that it is not, that inflation is going to be more persistent and a bigger problem than people think. Now that I've said that, not necessarily an 8.5% or 9% inflation problem. That's where we are now. That might be the peak, but those lines might come down. I'll agree with that part of the equation, but I think they're going to stop somewhere between 3.5 and 5. They're not going to go all the way back to 2. And the reason I think they're going to stop is I think that there is a thing, the wording I've been using is a post-pandemic economy. It is different than the pre-pandemic economy, or my shorthand is 2019. It is not 2019. In the pre-pandemic economy, we never generated any inflation. Why? Because we had relentless downward pressure on wages because of globalization. You could transfer your product or your service to cheaper countries, China for products, India for services. That kept wages stagnant. As we all know, real wages didn't do anything for 20 years, or maybe even longer, going into the 2020 pandemic. So people weren't necessarily getting a real wage increase. Well, they were being offset by that because they were getting cheap stuff from China. So even though you weren't getting a real wage increase, the things you were buying, their prices were holding steady or maybe coming down. And as far as the developed world being able to compete with the emerging world, especially when it comes to Europe, we were getting cheap energy thanks to Russia, especially their natural gas going into Europe, which funded their entire manufacturing base in Europe. Think of all the cars that they make in Germany and Italy and all of the other products that they make all the way across Europe. Well, all 3 of those trends are now under severe questioning. Globalization, is that going to continue to be the case? Or are we going to see some form of reshoring? And reshoring also brings us across to cheap stuff from China. China is the manufacturing base of it's the factory of the world making cheap stuff. But lately with COVID-0 and the chaos that it's been inflicting on its country and its growth rates, China can't be trusted anymore, not only politically, but economically to produce what they say because of all the disruptions that their countries had. And again, we're starting to rethink this whole thing, and this is part of the reshoring. And finally, the cheap energy that we've had that helped to fund things like the European manufacturing base, Well, Russia's playing politics with their gas levels, and turning on or off the spigot of the amount of natural gas that flows into Europe. If one or all of those things are now being questioned, the whole idea that we're going to turn tail and go right back to 2% inflation can be questioned too, because it needs globalization, the factory of the world keep producing cheap stuff, and dirt cheap energy coming out of Russia. If you continue to get all three of those things, we go back to 2%. If you don't get one or all of those things, the inflation rate stays persistently high, which means interest rates have to go much higher, which means that the Fed is not going to cut rates, which is going to keep markets under pressure and keep them very volatile. The final thing I'll say about this, I've said on many of these podcasts, I do believe that this post-pandemic economy is a secular change in the economy because of ending of the globalization, the cheap factory, and the cheap energy. But unlike the 1940s, after World War II, a lot of people have put this as an analogy. In 1947, everybody knew the world changed. The war was over. No one was walking around going, when am I going to get my job making Sherman tanks and fighter planes again? We don't need them. It's a different world. But in 2022, a number of people are saying, when am I going to get my job back, or when are things going to return to normal? You hear that all the time on Wall Street. That's code word for going back to 2019. We're not ready to say it's a different world. We need to start to restructure, change our supply chains, change our manufacturing process, change our sources of cheap energy, change who the factory of the world is. We're not ready to do that. We want to argue whether it is happening in the first place. Well, if we're going to do that, we're going to keep markets chaotic, we're going to keep markets volatile, and we're going to keep interest rates high. Once we've streamlined for the new post-pandemic economy, then inflation can truly come down. But that's years away because we're not even starting the process right now. The one example I've given many times is with the retailers, the Targets and the Walmarts. They're starting to realize that their inventory problem is more than just a slowdown in the economy. It's that the consumption basket in the post-pandemic world, work from home has been the argument I've used there, has changed. I consume more things and less services because I'm home more. So does everybody else. Walmart and Target have to realize that my consumption basket changed. They got to stock their shelves differently. They didn't. They have too much of some things. And there are stories out there that if you return stuff to a big box retailer that they have too much inventory for, sweatpants, they'll just give you the refund and you could take them home. Now, of course, you could say, well, there's an arbitrage there. I should do that. But yeah, it's only with select items that they have too much of, and usually you don't want that item in the first place anyway. And so they're starting to get it, but they're only starting to get it now, and only some of the big box retailers, and they still have to figure it out, and they still have to orient the economy for this. So the bottom line is, no, I don't think this is a one-time surge, that inflation is going to go away. I think it's going to take significant investment and restructuring for a post-pandemic economy to streamline, because we've changed globalization, we've changed China, we've changed our sources of cheap energy, and we're going to have to accept that new reality. And until we do, what we've seen in markets the last 8 or 9 months will continue, and interest rates, which the day we're recording, the front end of the yield curve is again making new 15-year highs. The 2-year note, got to 349 today, which is a new 15-year high. That trend will persist, and the yield curve will stay inverted.
Well, Jim, thank you for your thoughts today. Thank you, everyone, for joining us. If you have any questions or would like further information on Arbor Research, Bianco Research, or Arbor Data Science, please contact Gus Handler at gus.handler@arborresearch.com. Have a great day.